Good morning, traders, and welcome to the Bookmap channel. My name is Charles. I come from a community called Piratetraders, where we like to focus on the ES and the NQ. We read the market as an auction process, as a two-way auction process. That is to say, we are measuring the competition between the buyers and the sellers and who's winning. And then that tells us what is likely to come next. Well, is it going to be a surprise to anyone that the bears are in control this morning? Certainly not a surprise to anyone in my community, because we saw it coming last week when we broke out of balance. So let's take a second just to talk about that breakout, and then we'll zoom out and we'll look at it from a little bit of a longer time frame. Actually, let's go ahead and start with the longer time frame. So let me go ahead and open up just a regular candlestick chart of the ES. This is a continuous contract, so they take, the various contracts as they roll over and they put them together. And basically what we had was balance. There was two different ways you could draw it. You could draw it as horizontal balance that looked like this, okay? In which case we were in that balance for months. The market tried to go lower and couldn't. It tried to go higher and couldn't, so we just kept balancing. The other way you could look at it, if you were looking at it a little more short term, was the sort of triangle pattern that we had right there. Both of those, the balance area low was the same, and both of those we broke out of that balance on Friday. And now we are getting continuation of that breakout. So one thing that we keep track of, it's a very simple concept, but if you have a balance area and you break out of that balance area, you often make a move at least the size of the balance area. And this is on whatever time frame the market is in balance. Well, if the market was in balance over a period of weeks here and we break out over a period of days, over a period of weeks, we should be able to make a move the size of that breakout range. So that means we still have a lot of potential to the downside on this pullback that the market is doing. And so the question we're asking ourselves is, do we need to be short right this minute? Is the market going to open today and go straight down and continue lower? Or are we going to spend some time, going sideways first before we make that move lower? Okay. Well, what we're going to be watching is the gap. So as of right now, there is a gap in the ES. We measure gaps from wherever the market is opening to either the previous day's high or low. So if it's a gap up, it's to the previous day's high, but it's a gap down today, so it is to the previous day's low. So the gap is between wherever we open and Friday's low at 58.45. Okay. The first order of business for the market, whenever we open with a gap, is always to try to fill the gap. This is where a lot of traders get confused. They open up their chart, everything's looking bearish, they're convinced the market is going to continue to the downside, so they immediately go short. Then the market opens, it comes back up and fills that gap, and it squeezes all those sellers. But once it gets back in the previous day's range, that's where the strong hands are waiting to smack that market right back down again. Okay? So don't get fooled today if the first move is to the upside. If they start to try to retrace that gap, first and foremost, they may not be able to completely fill the gap. We may get resistance either right here around 58.32 or just below that gap fill around 58.40. Okay, we may get resistance at either one of those levels, and then that immediately smacks the market down. We may not get that gap fill. And that's important to keep in mind as well. But you just want to remember that the first order of business is always to try to fill that gap. Every time you have a gap down, when that opening bell rings, there are shorts from the overnight that if they don't immediately see the market continue lower, will exit their shorts. That's buying pressure. And you have people that will go long, even if they're bearish, just to get the gap fill. And then they would take profits at the gap fill. So there is always, whenever there is a gap, a chance that the market will fill that gap, which means it will always try. Now, if it tries to fill the gap and the sellers smack it down, well, then you don't need to worry about it, right? Because they're not going to get the gap fill, which means new sellers are joining, which means the market is going to continue lower. Okay. So at the market open in about 25 minutes, the first order of business is how far up can the market go? If they're able to get all the way back to the gap fill, if they're able to get all the way back to yesterday's low, Friday's low, we would look for resistance in there. Okay, we would look for that to start to become resistance. If it is, we're bearish, right? If the market can't fill the gap, we're bearish. The only scenario today where we can get to a sort of neutral stance, and I'm talking bigger picture, like what's the market going to do today, tomorrow, the next day? The only way we can get back to a neutral stance is if we can get back up above 58.45 and start to spend time and bring in volume up there. If that happens, if we are able to get back into Friday's range and start to spend time and bring in volume, then we look to come back up and target a move to the overnight highs around 58, we'll call it 58.67, okay? However, to me, that is less likely. Why do I say that is less likely to happen? Because we have momentum down. It's a very important concept that we talk about when we're studying the auction process. We differentiate between markets that are in balance, where they are just going in a range, and when markets are in excess, when they have momentum, when they are pumping in a certain direction. And one thing that we always say is that balance leads to momentum. If you are going to spend this much time going sideways, the odds that you're going to successfully break out of that, get signals of momentum down the next day, and then turn around and come right back up is pretty rare, pretty slim. Not impossible. Charles is not here saying the market can't go up. I just told you what it would look like if it does. It would get up into yesterday's range and it would stay there. If that happens, ignore what I'm saying right now. But unless that happens, what we should assume, and what is the highest probability, the most likely thing to happen, is that this market will continue this momentum lower, at least for a couple of days. After this many days of balancing, after winding it up tighter and tighter and tighter, the market needs to release all that tension. We probably haven't finished releasing it just yet. Okay? So that is why, for me, anything other than filling the gap and staying in Friday's range is a sign this market wants to go lower. Okay? So then we're asking, okay, if the market's going to go lower, what is that going to look like? Well, the first target to the downside, we filled it in the overnight, but we have not in the regular trading hours. So it still is a weakness in need of repair, is we have an old gap. It was a gap up from November 5th. Okay? That is the first target to the downside for the market. As you can see in the overnight, they got below there and then instantly ran out of sellers and started to pull back up. That same thing could happen right now in the regular trading hours. The market could open, poke below there, and then reverse and come right back up. So to me, if the market opens and immediately starts to go lower, that's the target. Or if the market opens, tries to fill the gap and can't, that's the target. Or if the market opens, it fills the gap, but then it gets smacked down inside of yesterday's range, that's the target. Okay, that is the first target to the downside. Once we get there, I will assume that they're going to test the overnight low, but I would not necessarily be bearish, short-term intraday, unless I saw new selling there, because there is a chance they dip below that overnight low and then come back up to fill the gap, especially if they haven't filled it yet. So if it repairs that first, gap that needs to be filled, gets below the overnight low, and it gets new selling, well, then the next target is this VPOC to the downside at 58.01. That's the next. And then we just start looking at nodes of support, potential areas where the market could reverse, and we assume that market can keep going to the downside. Okay? This is something we call monitoring for continuation. If the market gets a gap and go this morning and it starts immediately going lower, we don't make an assumption about where it's going to reverse. We just keep looking for signs that it is. We keep watching support levels and saying, does the market find support there? When it bounces, do sellers come and smack it down? Right? Are we taking the stairs down? Or do we get to support, bounce, and come back up and start to build momentum up? Whenever we see that momentum up, then we know the move for the downside is over. But there is a chance we could get quite some momentum down today. Okay? And again, that is just a product of breaking out of balance. We've wound this thing up real tight, and now we're starting to head in a direction. We can get some momentum in that direction. Any questions on any of that from the chat? Also, if you are hanging out in the Discord, you can go up to the tab that says Futures Charles, and you can leave questions there, and I will get to those questions as soon as I can. What's up, chat? What's going on? So far, we got 77 people hanging out, but only 14 likes. Ouch. What are you all long the market or something? What's everybody so moody this morning? Come on, guys. Smash that like button. Remember, we can make money both ways. It's okay if the market goes down. We just get short instead of getting long. No reason to fear momentum. Momentum is our friend. Good morning to Nor Auto Trading. Welcome. Kevin is here. Good to see you. Jay in the house. Another day in paradise. Trevor is here. Good morning to you. Moises, good morning to you. XYZ, good morning, y'all. Michael in the house. Ed is here. He says, what chart is it on the left of the screen? Great question. If you guys have any questions about anything, feel free to ask them. That's what I'm here for. We got 20 minutes till the market opens, and I've just given you my entire analysis of what to expect. So if you don't have questions, we don't have much to talk about. So the chart that you're seeing over here on the left side of the screen, that is a market profile chart. Okay. A market profile is basically just a way to organize the information. It's a lot like a candlestick, but in the way that a candlestick is two-dimensional. All a candlestick shows you is where did price go over a period of time. So these are daily candlesticks. This showed us where price went on this day, but nothing else, right? It showed us how much volume traded on that day, but we don't know where. Where did these people go long? Where did they go short? By looking at it in a market profile chart, we get to see the market in 3 dimensions. We get to see not only where did the market go, but where did it spend the most time, which is where we have the most letters. These are called TPOs. And where did it bring in the most volume, which is where we have these volume profiles. The darker the color, the more volume. So if you're looking at my regular trading hours profile from Friday, the red section is the largest 30% of volume. The pink section is the middle 40% of volume. And the white section is the bottom 30% of volume. Okay. So this chart just very simply shows me price action. It shows me what the market is actually doing. No derivatives, no, formulas, no nothing. Just what is the market actually doing in its purest form. Okay. Then over here on the the right side of the screen, I have the Bookmap chart. Now the Bookmap is showing me order flow. Okay. So the market profile is showing me where did the market actually go and how many contracts changed hands when it did. The order flow is showing me where the market might go and what might happen when we get there, right? Because the order flow is showing me where there are orders currently sitting in the order books. Now, for me personally, I'm not too obsessed with where the orders currently are. What I'm obsessed with is when do things change? Look at here earlier this morning. This was a change in the market that would catch my attention. The market had a ton of liquidity below, and then they started to pile on liquidity above. Okay? So they were trying to pull the market back up to test this liquidity. They disappeared the liquidity below, and then almost at the exact same time, they flipped this one. So they took it from up here, and they flipped it down to here. So from resistance into support. And so that tells me that they're trying to scare the price away. They tried to use it as a magnet to pull price to it, and they couldn't do it. It still continued lower. So now they're trying to use it as a magnet to scare price away, right? So what would I expect? Well, if all of a sudden it starts to disappear, which it is as we speak, you can see the color is getting less and less dark down here. Okay. As that begins to disappear, the market turns around and comes back down. Okay. So that is the main focus that I have for order flow. Well, you have to understand about order flow is a lot of orders get spoofed. A lot of the stuff in the order books is a scam. It's a trick. They're just trying to trick computers and bots into doing something. So they're constantly throwing, liquidity up here and liquidity down there and moving it around and adjusting it literally in fractions of a second. Every minute of every day, it's crazy. And so it doesn't really matter. What matters is, when does it change? Because when something changes on the order flow chart, something is going to change with price, whatever price is doing at that particular moment. Because all the computers, which make up 90% of the liquidity, they're all reading the current order book, and they all adjust when that changes. And then the last thing I like to use Bookmap for is the stops and iceberg setting. You get this with the MBO bundle. And the stops and icebergs basically just give me a clue of what type of behavior the market is doing. If I've got tons of icebergs on both sides of the market, it is being artificially held in a location. Not just in that moment, but like overall throughout that day. I should expect a day where the market's going to be very choppy and have lots of reversals and reverse at strange areas and make like harsh reversals where it makes a huge move one way and then it completely reverses, then it completely reverses again. If I'm seeing lots of icebergs on both sides, a red, a green, a red, a green, a red, a green, over and over like that, then I know what the market is doing. It's chopping, it's grinding, it's trying to balance. Okay. If I see a lot of icebergs in one particular direction, so a lot of icebergs going long, for example, and none going short, I know the market is trying to reverse and move down and create momentum up and vice versa. And then lastly, I like to use this stops right here to notice when there's really large stops. So if there is stops of over 100 contracts or over 200 contracts, if you see one of those pop up, that means one individual account, just one person somewhere got stopped out for 200 contracts or 300 contracts or whatever. If you see that, sometimes, not always, but sometimes that is a higher low of the day. So if the market is making a move lower, it gets below the overnight low, it reverses and starts to come back up. And then I click over and I look at my Bookmap and I see there was a huge stop right there at the low. We took out 400 contracts or something like that. That will probably be the low. Or maybe one more poke and then it'll be the low. Okay. And that's where I get my insights to try to figure out what's happening next. I look at what price is doing. I look at what it could do. And then I use my judgment to predict what comes next. And I got the good brain, so it processes the information well. Good morning to 18 Siri. Ulysses says, how about the NQ? Let's take a look at the NQ. See what's happening there. We'll do the top down on the NQ. So we'll start on the daily and try to give ourselves some context. Let's actually go all the way back. Let's go to the monthly. Okay. So on the monthly time frame, the NQ has now made a lower low. That's important to see. Okay. It tells us that the momentum is definitely over to the upside on a longer time frame. The fact that the monthly made a lower low. Okay. In the past, when the monthly has made lower lows, it could potentially trend lower for months. Okay. Doesn't mean it will, just mean it can. You can see other examples of where it immediately bounced. But it's just a potential that it could continue lower. Let's zoom in and take a look at the weekly. See if we get any new information. So on the weekly, we can see the breakout of balance. We can look at it two separate ways. We look at it over the last few weeks. The market has been balancing sideways. Or in this case, over the last month and a half, the market's been balancing sideways and it's breaking out to the downside. Where do we expect that to go? Well, if this breakout to the downside works, we're looking for a move down to about 20,000, 20,080. If this breakout to the downside continues, right? The other one we could look at is this trend line right here, right? The trend line from the lows. That is another break. Let me draw that. Just so we get a clear, yeah. Okay. So same story there. The market breaks out, it creates momentum down. Okay. In that case, we'd be looking for about the size of the channel. So probably somewhere around 19 maybe 20,000 to the downside. Okay. So bigger picture, the NQ is doing exactly the same thing as the ES. The ES did it on Friday. The NQ is doing it now, which is breaking out of balance and looking for momentum lower. So let's zoom in and we'll look at the market profile chart and we'll look for some specific levels to pay attention to. Doobie doobie doo, my data's loading. Doobie doobie doo. Info unfolding. We'll give that a second to load. Good morning to Yakamuzna. Boy, I murdered that one. I'm so sorry. Yokozuna. Willie T in the house. XYZ says, I purchased Bookmap Global Plus yesterday, but don't know how to start with the chart on your left. So market profile is not part of Bookmap. It is a separate thing. If you just Google your broker and then plus market profile or plus TPO charts, you should be able to figure out how to get them. So they're available through a lot of different, software packages. And you probably have something that you can get access to. If not, the company I use is called Window Trader. Window spelled without a W at the end. Okay, so now let's look at the NQ. Okay, so the story is exactly the same intraday today with the NQ as the ES, right? First order business, no matter how bearish it seems, first order business is always to try to fill the gap, to try to get back up to Friday's low, which on the NQ is right here at 28.77. Okay, so that's the first target to the upside for the market, is to try to get back up there. Same as I said with the ES, if it's able to get back up into Friday's range and it can stay in there, it can spend time and bring in volume, then I would be neutral. I would no longer be bearish. But if it gets to yesterday's low and gets smacked down there, it gets resistance at yesterday's low, then I would be looking for it to turn around and continue lower. Okay, that is what we call a gap and go. Or if it tries to get to Friday's low and it can't, and it immediately gets smacked down, that is also a gap and go, which is very bearish to see. Okay, either of those scenarios happen, the first target to the downside is the overnight low at 26.97. Now you will also make note of the fact that I just marked this level right here. This is a large node on the cumulative volume. Why did I mark that level? Because the NQ loves to move from one large node right to the next one. Let me move this over. So the fact that we broke away from this large node on Friday and began the move, the highest probability is that move is going to be to the next large node, which is there at 26.30. Okay? So that is where you'll be looking for the market to go if we get below the overnight low and get new selling. I would need to see a lot of new selling to think they're going to continue below there. I imagine today this will hold as support, at least for a few hours, but maybe even all day. So like I said, with the overnight low for the ES, it is a potential reversal area where I want to be convinced the momentum down is going to continue to trust it. I would say the same thing about this large node around 26.32. That's a great place for the market to find support and then go sideways the rest of the day. Okay. So if we get new selling below there, then we're bearish for continuation lower. And we are doing what we call monitoring for continuation to the downside. I would put both markets in exactly the same place this morning. They will try to fill the gap when the opening bell rings, but if they can't, down they will go to the overnight low. We got 4 minutes till the market opens. Any other questions? Limmy says, let's go. I agree. Let's get it started in here. We got a question in the Discord. Can we review NQ? And what is the possibility for it? Possible look for today? So yeah, like I said, both markets, this is one of those days where something has changed, right? Individual stocks don't matter right now. It's the whole market. It is the whole reaction of everyone. When the market does this, when it starts to pull back on a much larger time frame, it can cause a lot of panic. Panic is a predictable human behavior. What do people do when they're panicking? What is your grandma going to do when she opens up her 401k and she sees that she's down, 4% over the weekend or whatever, right? She's going to panic. She's going to start to think, oh no, should I sell? This is my retirement money. I can't lose any of this. I need this to pay my bill, right? So panic is a reliable signal to cause momentum to the downside. So right now, both markets are in the same exact position. Now, that doesn't mean they'll move tick for tick, together, but probably today, they're either both going to do the same thing. They're either going to get a gap and go and continue the momentum lower, or they're going to get back up into yesterday's range and find new buyers in there. Two minutes to market open. 2 minutes to paradise. Cool Beans says, what's for breakfast? Hey, Cool Beans. I didn't eat breakfast today. I just drank coffee. No time for breakfast for the pirate. Freddie says there is a node between the large nodes. Does that matter on the NQ? It's a good question, and not that much. So it's all about size, relative size. It will move to the biggest one. Does that mean it can't move, in between them to smaller ones? Yeah, it can. But I'm thinking bigger picture here. So for example, you have this big node right here and this big node right here. When it finally broke away from the big node, within 2 days, it was back at the next big node. It tried to go lower and couldn't. This little tiny node was the low there, okay? But when it couldn't break away from this to the downside, guess what it did? Slingshot right back through and got to this node up here, okay? Did it again on the way back down. Slingshot right through, and then here again, breaking away. Where is it likely to go? Sure, maybe it just goes to this one or it just goes to this one. But the highest probability is that it's going to this one, the great big one that's screaming at you from a mile away. The NQ just loves to go from one large node to the next. It's very, very common. And that one's down at 26.30. All right, the markets are open. The first order of business, trying to fill that gap. Can they fill the gap? If not, we've got momentum down and we're getting bearish. Let's see what happens. This is a big gap now, bigger than I predicted. So anytime the gap is more than 20 points, it increases the odds it won't get a fill. Larger gaps are less likely to fill. They still can get a fill. A gap fill's a gap fill. Don't get me wrong. But I'm just saying gap fills this large often don't fill on the first day. So we are definitely looking for resistance. The first potential resistance area is going to be just above where price reversed right now. It's going to be 58.22. The next one is going to be right here around 58.30. Okay, so we're looking for resistance there. If the market makes it through both of those, the next one is going to be up around 58.38. And as strange as it seems, right now, we should be assuming there's going to be sellers there because of how big the gap is. We should assume we are going to get smacked down in resistance. And only if we fill the gap do we start to change our mind. We got a gap and a gap, and a gap, and a gap. Okay, so this is reading as gap and chop to me. What does that mean? It means that the market probably wants to go sideways, up and down over the opening price a few times. I know that because it didn't quite make it to a good resistance and it instantly got smacked down and it left behind a low volume high. So I think we may be in for a few minutes of up and down through these levels before we can really trust the information. Gap and chop, the least fun option, because it's the most confusing. Gap and chop. Griff says, how quickly do you get into trades with gap and goes right at the open? If I was going to be in a gap and go trade, I would be putting a short right at the opening price right now. If I was going to be in a gap fill trade, I'd already be in it. My long would have been at the opening price when we just passed through it a moment ago. But like I said, to me, there's no reason to look for a gap fill trade when a gap is this large. It is not to say the market can't fill the gap. It can. But I don't lose any money by not being in a gap fill trade, right? The real money will be made in seeing the resistance and getting in the gap and go. So large gaps are different than small gaps. Small gaps, I'm happy to go for a gap fill every time. But a large gap like this, I'd rather wait to see resistance and then look for a gap and go trade. So it's not a matter of time, it's a matter of information. If I instantly get the information, so for example, if the market had opened and it had instantly gotten to 58.13 and we got new selling down there, it would be like smash that market sell button and get in a trade and don't wait around. But that's not what we're doing. We're chopping through the opening price a few times. So now I got to give it some more time. You know what I mean? It's a case-by-case thing. Gap and chop. Choppity chop. All right, pushing into resistance here. Okay, so what do I pay attention to now? The tempo. This right here is shorts covering. This is not new buyers going long. This is people that were short getting squeezed. We had a little potential resistance right there at 22, and they couldn't hold the market down. So now they're taking out all those stops from sellers from the overnight. But that's not new buying. When it's just shorts covering, they run out. David M says, how do you see gaps compared to the prior range or the prior close, the prior range? So as far as I'm concerned, I split out my ranges as such. 9:30 a.m. to 4 p.m. is regular trading hours. That's New York time. And 4 p.m. to 9:30 a.m. the next day, that's overnight hours, right? So I'm just looking to get back to that previous day's range, which in this case is 58.45. Okay, so as we pass through the opening price, something very important is happening. This is triggering a gap and go. So they tried to fill the gap and they couldn't do it. The buyers tried. And now what's going to happen? As the market goes lower and lower below the opening price, we squeeze those buyers. We start to get momentum down. So now we're looking to test this level at 58.13 and monitor for continuation lower from there. Gilbert says, what is better, footprint alone or with Bookmap? I would say with Bookmap. If you pay for Bookmap, you can get footprint within it. You can set it up on the same profile. But make no mistake, guys, the magic of Bookmap is this ability to see the changes in the market, to be able to very quickly, with your eyes, just recognize when orders get pulled or get added in the heat map. So whatever you want to layer on top of it, whether you want to put candlesticks on top of it or whatever you want, I would have that heat map in the background as a, extra piece of information. So you can recognize when things suddenly change. Very choppy. Good morning to Arjit. Welcome. Will is here. DNK in the house. DNK says we filled the gap from the 5th, so now we're going back up. Not by my measurement. Here in 2-tick increments. There's still some gap, brother. 2 points, 3 points to go. But I do agree with you that once we fill it, that might be it. Or the test of the overnight low might be a look below and fail, and that might be it. But you know what I'm going to say. If we get new selling, that changes it. Holger in the house. Guten Morgen. He says he's missing my voice. Well, I'm here for you, Holger. Anything you need, I got you. Oh, yeah. Felipe says, Charles, do you think it is better to use the tick Q instead of the tick if you are trading the NQ? Yes, I do. So the tick Q is going to give you pure information than the tick. So yeah, that's what I would watch if I was trading the NQ. To be totally honest with you, they generally look almost identical anyway, but there would be subtle differences that might be helpful, especially for day trades. If Lady D was here, I think she's on vacation right now. She went skiing in Europe. But if she was here, she'd be reminding everyone to always take profits if you're looking for a gap fill trade. 1 point above, because they love to bounce it right there, which they did, but now they filled that gap. Okay, so that old gap from 11.5 is now filled. We've just removed the magnet that was pulling on price to the downside. So now the sellers have to prove themselves to keep this momentum going. Okay. So now we are once again looking for resistance. We're pushing into it right now. The first potential resistance is 58.19, the halfback. Does that smack the market down? Well, then great. We still have momentum. If not, we're looking to head up to the next resistance at 58.30, and we'll look for sellers there. I do think they're coming back for these lows again, but we got to find the resistance that's going to bring it back. So this second move, this is the same thing that happened with the first move to the upside. What was it? It was shorts covering, right? Now they're doing it again. They got everyone short. They flipped it before getting to the overnight low. So now all those new sellers that stepped in over the last 10 minutes or so, they're all getting squeezed. That is not new buying, right? That does not mean this market is going to head back up to yesterday's range. It just means we squeezed some sellers, and now we're giving some stronger hand sellers a chance to get in at resistance rather than having to chase price at the lows. So we are looking for resistance at 58.30, just above us. Percy says, thought this stream was on the Discord. Yeah, so we were supposed to do Discord this week. We'll do it next week instead. I didn't have a chance to book anyone to join me for those Discord streams. So this is on the Discord, but it won't be exclusively on Discord, but next week will be exclusively on Discord. I know I said it last week, but it's true this week. Ed says, what is your take on 5810 on Bookmap? So I think it's going to spoof. I think it's fake. the way to look at liquidity in Bookmap is always to look at what happens when something changes, right? Speaking of which, we're now piling some new stuff up here around, it looks like 50. Let me zoom out a little. 42. That just caught my eye as a potential, move right up to there and then reversal before the gap fill. But yeah, so it's like, you can see here, they're adding and they're adding and they're adding liquidity. See how it's getting darker and darker and darker as price is fighting and fighting and fighting and fighting to get down to it. And then price reverses. It breaks up out of there. They start getting shorts covering. What happens to that liquidity? Poof, it starts to disappear, right? So now as price starts to come back down again, I bet you they'll start to build it up there again. It'll start to get redder and redder and redder. If that happens, expect price to keep coming down to it, and then it'll disappear right when it gets there. But what else just caught our eye? This liquidity up here. This showed up at the same time that this down here started to disappear. So now my prediction is they want to chop around inside the gap for a while. Probably like the next hour. I bet you they're going to come real close to filling the gap, and then they're going to reverse back through and come for the lows, and then we're going to get the momentum down in the second half of the day today. But this flip right now is telling me they want to play some games. They want to chop the market around. They want to get everyone long for a gap fill and then squeeze them and come back down and get everyone short and then squeeze them and come back up. This is chop. Unfortunately. But nobody here is upset, right? Because we already clarified at the start. If we got momentum down, the first target was just getting to fill that old gap. And that might be all the market was going to get. So we locked in profits, right? Or partial profits at least. So nobody's sweating the market going sideways for the next hour or two inside the gap. No one's going to force trades or get upset. Perfect. The market generated information told us it was going to happen. We discussed it here and it happened just as we expected. Now the market generated information is saying chop inside the gap. So we'll just take it as it's given it to us. And we're not going to get upset. We're not going to get emotional. And we're definitely not going to get squeezed. Okay, so as we're going to start chopping around now, the next level of importance to me to the downside is this node right here at the opening price. So basically 58.18 to 58.16, that area right there. If they come back down into that and that starts to act as support, we're going to spend a few hours going sideways, okay? And it just is what it is. They're going to get everyone long, take it down, get everyone short, get them long, get them short. They're just going to keep doing this as long as it keeps working. But if when we come back down, we pass through that node, the market comes through and it doesn't get support there, then our target is a move to the overnight low. Okay. So I'm fine with it being chop inside of here and uncertainty, looking to get short up here or up here. I'm also fine with no support there, getting me short right there for a quick little move to the overnight low. But I have to accept that we may spend the next hour or two going sideways inside this gap, squeezing everyone on both sides multiple times, because that's what the market loves to do. I mean, it's its favorite thing. It loves a range where everyone's feeling emotional and feeling like they have to jump in trades. And all it has to do is make a tiny little reversal and it squeezes them all. Oh boy, that's the market's favorite thing. And that's what it's got. It's got a highly emotional market. Okay, so can anybody tell me what just changed on Bookmap that should be catching our attention? Tom Gunn said, crying face guy. That's not the change. What change? Something just happened. Out of nowhere. Poof. Going dark. Jason got it. Yeah. Look at all three. Boop, boop, and boop. All three of these nodes below price that have been sitting there since before the market opened just disappeared. Just like that. All these traders at the exact same moment decided to pull their orders. Isn't that funny? No, my friends. That means something just changed. They're now feeling comfortable that the market is going to move higher. As I said, this was trying to scare price away. So they now are feeling good that the market is going to make its move higher towards this node up here at 58.42. I don't think that's real orders. I think that'll spoof too. But now they know they're getting their move up. Whenever you start to see these pop back up here, boop, boop, boop. You know, you can see the first one coming in right here. As soon as these start to pop up, you'll know they're done with the move to the upside and they're ready to flip it and start bringing it back down. Because remember, 98% of the liquidity on the ES is computers. It's computers, y'all. And so by changing this information second by second throughout the day, they force all the algorithms to adjust, to change their plan. And that's how they squeeze them. This is one computer squeezing another computer, you guys. And we're just stuck in the middle. But that's all right, because we don't diddle in the middle. So we don't got to worry about it. Okay, no resistance at 30 means we are making that move up towards 38, looking for sellers there. How are we doing it? Man, this is just like rinse and repeat. Short covering, again. It's working like a charm. But what did we just see? Very large stop. Some poor schmuck just got taken out for 700 contracts. Sucks to be you, bro. So this means the market might be ready to put in its top and reverse and start coming back down now. Let's see what happens. I talked about that pre-market. Y'all were here. You know what I mean. John D says your VIP is 20, not 10. Oh, thank you. I got to fix that banner at the top. Appreciate you. Yeah, the brigade membership is now $20 a month because as you guys can see, I crush it. Okay, this is important resistance right here. If the sellers want to get back down below that opening price, they got to come smack this market down. Because if they do that, they can squeeze all the gap fill buyers. A lot of people going long now. A lot of people chasing price near the high. If they can smack the market down pretty soon here in the next few minutes, they can squeeze all those buyers. If not, those buyers will win and get that gap fill. Where, oh well, are the sellers? Man, this is the absolute worst moment to have to cut off the stream. Oh, man. 2 points from a gap fill. a 1.5 in a gap and chop where literally anything is possible. Too funny. Ed says, are you able to determine whether it's buy limit or sell limit orders on the heat map? Yeah. So anytime you see orders above price, it's always sell. And anytime you see orders below price, it's always buy. Remember, stops aren't visible in the order book. What makes a stop is that your broker is holding on to that order until the moment that the price gets to that level and then putting it in the order book. So if you see liquidity above, it is limit shorts. And if you see liquidity below, it is limit longs. Okay. Now, as we've discussed, that does not mean they actually have to get long or short there. They can spoof it. They can pull it at the last minute right before it fills. For example, right here, just now, we were watching this large node, and right as we got to it, look at how many they pulled. So they let a little bit of it fill, but not very much. So just because you have limit orders above or below price doesn't mean they're going to fill, but they are sellers above, buyers below. And if you want to really simplify things, and I do mean really simplify them, take all the complexity out, just assume the market will always move to where the most liquidity is. So it doesn't mean it'll move in a straight line, but if there is more liquidity above price, today it'll make its way higher at some point. If there's more liquidity below price, at some point today, it'll make its way lower for that liquidity. The market just always wants to go wherever contracts are going to change hands. And that's what it'll do. So this morning, by going right down to that overnight low, by coming right down to here, they got a bunch of people to go short. So that was the way to get the most contracts to change hands. FOMO sellers, right? Chasing price to the downside. Then they reversed it back up through the opening price. And what did they do? They squeezed all those sellers, creating a bunch of longs, right? Well, then what did they do? They came right back up to almost filling the gap to the upside, bringing in FOMO longs. And now what are they doing? Reversing right back down to squeeze those longs, turning them into shorts. That's what the market freaking loves. It loves to get you to do something, then squeeze you, and then get you to think the other thing is happening, and then squeeze you. And it just does this all day. But if you have the tools in front of you, if you recognize where does the market spend a lot of time, where does it bring in a lot of volume, you know where these potential reversal levels are. When you look at what happens to Bookmap at those moments, you figure out what comes next. So just now they threw this liquidity in here as price was going sideways. It started to pull price down to it. Now they've disappeared it. So what's it going to do? Head back up for a second, right? This is the way we use this information, this market generating information, to make sense of what they are doing, which is always freaking random. The market is just a hungry animal. It just wants to eat contracts. It doesn't care if those contracts are above price or below. It just wants to go wherever it has to go to get as many contracts to change hands. If you know where those changes are going to happen and you know what to look for when the market gets there, you have an edge. Okay? So unfortunately, it's not what I wanted for today. It's not what you wanted for today. But as I've said, it looks like we're going to spend a couple hours chopping around inside this gap. Okay. So if you wanted to way oversimplify things, you could just do this. You could put a notification so that your computer makes a little noise if it passes back above 58.45. Okay. Getting inside yesterday's range is the next place for something to change. You could then put another one at the opening price. Getting below the opening price around 58.17, that is another place where something could change. At both of those locations, one of two things will happen. And again, I think we're going to go sideways for a few hours first, but at one of those two locations, either the market will get inside yesterday's range and get new buying, in which case the momentum down is over. We don't worry about the lows anymore. We're now worried about heading up to test the overnight highs up here around 58.67. If the market gets up into yesterday's range and it gets smacked down, guess what we're looking for? A move back through the opening price. Okay? So those are the one of two things that will happen inside yesterday's range. Either we will find buyers and continue up to the overnight high, or we will find sellers and continue back down through the opening price. What an excellent opportunity. Plenty of money to be made either direction, depending on what happens, right? Same thing with the opening price. If we get to the opening price and find support, we're coming back around for the gap fill. But if we get to the opening price and we get new selling down there, well, then we're targeting move to the overnight low and probably even 58.01 with new selling below the overnight low. So again, lots of money to be made depending on what happens at the opening price. But for now, in between the opening price and yesterday's low, this is what you're going to get. You're going to get a lot of reversals randomly out of nowhere, and they're going to be harsh because the market is first going to get a bunch of people long, then squeeze them, then get a bunch of people short, and then squeeze them. So if you like trading chop, if you're a scalper and you're just looking to make a point here or there, have fun. Enjoy the next few hours. If you're a day trader, grab a cup of coffee, sit back and relax. The really great opportunity today will be either inside yesterday's range or below the opening price. Otherwise, this market is likely to drive you mad. It is what it is, guys. Don't take it out on me. Okay? Don't shoot the messenger. Thank you very much. I appreciate you all. If I missed your comments or your questions in the chat, please head to the Discord and throw them in up there, and I will respond to them later on. If you were a member of the brigade, head on over to the private stream, and I will see you there in about 2 minutes. Thank you very much, Bookmap, and we will see you next week in the Discord. Thanks a lot.